Yes.
Okay, you're done, right? Okay, let's go over this question. Okay. Um, okay, let's go over this question. So let's use T accounts, right? T accounts to figure out the cash payments to suppliers. Okay. So what do we know with this? Cost goods sold, right? Cost goods sold was 300. Okay. Um, First thing you're gonna do is you want to look at the inventory accounts. Okay, so let me rewrite this inventory accounts. So it was 90s. Now by the end of the year, we're gonna be 93. Okay, so you want to look at what is the total purchase. Okay, purchase of those inventories. Okay, so how to figure out the purchase of inventories? You want to look at the this T account for inventory, right? When you purchase your inventory, what are you gonna do? You debit, right? You debit to the inventory, okay? But we don't know how much, right? But what we know is we know the cost goods sold, right? Cost goods sold is 300. So when you sold your merchandise, we debit. Cost goods sold, we credit inventory, right? So that's why total credit to this account should be 300. Okay, so then we can, based on this, we can figure out what is this total debit, right, to inventory. This one has to be what? 303, right? So 90 plus 303 minus 300, that's how we get 93, okay? So this one has to be 303. So this is what? This is the cost of purchase, okay? When you purchase your inventory, we debit inventory for 303. And we credit accounts payable for 303. Okay, so but accounts payable was what? Was the beginning was 14, by the end of the year was 16. So then we're trying to figure out cash payment to suppliers, right? When you make payments, you purchase your inventory, you increase your accounts payable, right? When you make payments to supplier, you decrease accounts payable. Okay, so that's why when you decrease accounts payable, you're gonna what? We're gonna debit, right? Accounts payable. Okay. So in this case, 14 plus 303 minus something gonna equals 16. So this one has to be what? Has to be 301. Okay. It has to be 301. So 301 should be the cash payment to the suppliers. Okay. So that what it was the journal? You debit accounts payable for 301, we credit cash for 301. That's the cash payment to supplier. Okay, so this is approach. This is the original approach or the T account approach. Okay, but our new approach here, instead of we analyze those, that kind of complicated, right? So like two steps. We just write a one summary journal. Okay, how to write summary journal? You put everything together. Okay, so in this case, those related here item is what? We know already we need to make cash payment, right? So we need to make cash payments. Okay, so we should credit cash, right? And then you look at those inventory, accounts payable, those are related, and the cost goods sold also related. Okay, so when we have cost goods sold, we should debit, right? We should debit cost of goods sold. Okay, cost goods sold for 300. Okay, and then you look at the inventory account. Inventory was 90, now become 93. Inventory increased by 3. This is the asset increase. So we should debit, right? We should debit inventory for 3. And accounts payable was 14, now becomes 16. Accounts payable is liability increase. We need to go credit, right? So we should credit accounts payable for 2, right? 2 millions here. Okay. And then because this is a cash payment, right? That's where we need to credit cash for something. And this is a summary journal. Based on this cash, this numbers has to be 301. Okay. So again, This is the way to get the 301. This is the way to get the 301. Okay, either way gonna be fine. But we're learning the summary journal method. Okay, you need to know how to write a summary journal. Any question?
Sir,
Yes, go ahead.
for the inventory and account payable, so the both free and two is the difference between 203 to between the 203 to 200, right? For the inventory, that's got free.
Inventory got three. Yeah, inventory is what? It was 90 by the end of the year was 93. That's why it's increased by 3.
Oh, okay.
Okay. Accounts payable was 14. Now by the end of the year it's 16. That's why accounts payable increased by 2.
Oh, okay, okay.
That's why we have this debit 3 because inventory is assets, right? Asset increase, you go debit.
Oh, okay, got you.
Accounts payable is liability. Liability increase, you go credit.
Okay, okay. Thank you.
You're welcome. Okay, any other question? You guys good? Okay, so now if you okay, let me switch this part. Okay, so you're good, right? So this is how I just show you the old method and new method. Okay, so now we're gonna focus on the new method. Okay, we're gonna focus on the new method. Wait. Okay, we're gonna focus on a new method. Okay, so we write it down again. Let me repeat this part. Okay, so so this is the old method, right? So T accounts here, right? To how to figure out this 90 here. We're trying to figure out the cash payments, cash receipts from customers, right? So we use T account to do that. Okay, and then the wait, sorry, go back to this. Okay. So this is the old method, but the new method here, we don't need to use T accounts, right? Instead, we look at this related item, cash receipt from customer, those sales revenue related, because sales revenue was 100. That's why we credit 100. Okay. And accounts receivable is also related. Accounts receivable was 30, now become 32, right? So accounts receivable increased by 2, assets increase, you debit, right? So that's why we debit 2 here. Okay. So if you write the journal, we debit. I put it together. Okay. So instead of put it down in the spreadsheets, so let me just write it down. Just copy those, accounts receivable for 2, right? Sales revenue for 100. And then the last item is the cash, right? So we figured out this one has to be 98. Okay, this is the summary journal. Okay, and then that's why this is 98. Okay, the debit. Okay, cash. So this is what this is a state. This is a cash flow spreadsheet. Okay, cash flow spreadsheet. Whatever we put it here is talk about the cash. Okay, talk about the cash. When we debit cash means we have cash inflow, right? So this is the cash inflow from customers or cash receipts from customers. Is that clear one? Any question? See what we're trying to do?
Are we going to using two table when you create the spreadsheet?
2 tables. Oh, you mean the spreadsheet? We have 3 spreadsheets. We have a balance sheet spreadsheet. So like this, right? So you can see this example. This is the partial, okay? This is the partial balance sheet spreadsheet. This is the second spreadsheet. It's the income statement spreadsheet. And then this is the cash flow statement spreadsheets.
So it means that from the T account, they have 3 number. We need to put into different.
We don't use T account anymore. Okay, T account here just try to help you. The old method just can build some connection. Okay, So, but now we don't use T account anymore. We just use the summary journal method. That makes sense, everyone? And we write the summary journal in the spreadsheet directly. Okay, in the spreadsheet directly, like this. Let me see that again. Okay, like this. Okay, so we write the summary journal in the spreadsheet directly. Okay, so what do we do here in this case? See, we debit here, right? We debit to accounts receivable. We credit 100 to sales revenue, and then we debit 98 to cash. That's it. Okay. So that's the spreadsheet, right? That's the spreadsheet we talk about. That's the summary journal we talk about here, right? So that's the summary journal, okay? But we write it down in the spreadsheet directly, okay? Is that clear? Any questions before we gonna go over all of the questions, all of the spreadsheets, okay? All of those item by item. You guys, any other question? You good? Oh, just give me a moment. Okay, just give me a moment.